Welcome everybody to our next webinar here at JFD Brokers. My name Stefan Friedrichowski as the speaker for today, and just call me Stefan. So you see my last name. That's really getting complicated. So no matter, absolutely directly, Stefan is the right choice. Yeah, today we have the 18th of May 2017, and now I'm smiling and somebody will know why. And we have 7 p.m. and MESZ. And because I have been asked for what does that stand for, and that is Middle Europe Summertime Zone. So I'm not absolutely sure whether I got it 100% right. Because this summertime, I'm not sure whether you really named it that way. But anyhow, we are together, and that's quite well. So today's topic or title of today's webinar is trend strategies, and talking about trends in trading is always something good that is we like, and I know that this basic setup is is for everybody a good strategy, but I will look to that maybe a little bit different than you did it in the past. So just wait a second for that webinar, and I hope that you can learn a little bit more about trend strategies and trend trading. Before we go into the details, just a few seconds here before I have always to show up exactly that slide, the so-called risk disclaimer, because we talk about trading strategies, but I have to mention that finally when you do your own trading, you do it always as for your own, and I assume that you know it quite well. So that is mentioned, so we can directly go into the topics of today. But before doing that, let me quickly mention that during our last two webinars, and you find those webinars on the YouTube channel of JFD Brokers quite easily, we have had two strategies. One was about pair trading, oil, Brent, WTI, and the other has been the DAX seasonal, the day of week trading. And I mentioned at that time, hey, I will trade those strategies further. So let me quickly show you. It's indeed those strategies running, but it's not this one here. This is a little bit more complicated one. But we have here the first one, which has been the pair trading on the two oils, Brent and WTI. So finally, right now we don't have a trade running, but we are, in the profit region. So we have earned up to now 64 euros. So that's good. So strategy works well. And the other strategy, which is actually already running, is this one. This is the one I showed during the development phase of this strategy, because at that point in time, the strategy has been traded on the so-called future contract of JFD, so the CFD on a future contract, with the restriction that we can only have volumes in steps of one. So therefore, we trade always here one lot. And you see the result up to now. We have earned a little bit more than 400 euros with that strategy, and now everything has been developed in a way that we can use the same strategy on the DAX index, still entering the trades at 8 o'clock and closing our trades at 22 or so 10 p.m. And that is now the new account here. So this runs as well. Today is a long trading day. That means we have opened a long trade. This is a little bit in the minus, but for example, look for yesterday. Yesterday was a short trading day simply because of the definitions, and Indeed, that was a quite good trade. Yesterday, you see that black candle here, huge candle to the south, and that was fully taken. So really a wonderful trade yesterday. But we know all that this needs a little bit more statistics, and we have to wait a little bit more about final results. But anyhow, I just want to share those results with you because for me it's important that I mention that what I do here and what I'm talking about is not something out of the fantasy, so it's something real, and that might be a little bit different to a lot of other speakers. And the good thing is, but not at JFD, what we talk about is what we trade, and that is meant quite serious. So today is all about trend strategies. And I have simply three topics in total here. And the first is I want to share with you some basic aspects about trend trading strategies and why they are in principle quite good or important for anybody's trading activities in a more general way, generally looking to trend trading activities. And then I would like to share with you two strategies, and one is called the multiple EMA, and the other one is called the lead leg strategy, which is a Forex strategy only that is really meant for the Forex markets, whereas the first one is something which is good for indices as well or any other underlyings in principle. Both strategies are not in a way we talk about the last one during my last two webinars. Those are still strategies where you and everybody has to make decisions. So if you think about the one of DAX day or week trading, there we have an absolutely set of rules. We know exactly what to do at what point in time and anything. So that was a real systematic approach with fixed rules. What we do here for those two strategies is we have rules, yes, but the final decisions about stop loss, for example, the exact entry point in time, entry point in price, is still something we have to derive out of the chart. So it's a little bit more like normal chart trading, but with some help, with a little bit assistance by some basic rules. But before I totally dig into the trend trading definitions and all, just to remind you why trend trading is that important. You remember that chart has been shown already, shown last week or 2 weeks ago in the DAX webinar, just to think, hey, yeah, trends are something quite good, and you see that it's the DAX for the last 17 years. There are phases with clear trends, and those trends, of course, can from now looking to the history being identified quite easily, and anybody could do that. Even my grandma would be able to find the right trades in those in this chart, and nothing against grandmas, but mine is 90 years old. So, but anyhow, so here you see absolutely good trend behaviors, but of course we have phases with no trend. And the question is now, how can we identify, even at the early stage of a trend, that we should enter a trade in either long or short direction anyhow. So, but this chart gives you, just one simple picture already the idea of the importance about trend trading and why we should have in our overall toolbox about trading trend strategies as well. So, so why is trend trading that important? On the one hand, I can share with you a result which is not pure mathematically derived when I say, hey, trends in a pure sense are only 30% time-wise of all overall movements. So it's only about 1/3 of the time that we have clear, visible, good trends. And nevertheless, I'm saying, hey, it's a good idea to have a trend trading strategies in our portfolio. And there are a couple of reasons for that. But the main reason is that those strong trends, and they have occurred in the past and they will occur in the future as well. Those trends are what I call a deviation from random behavior. You know, if you look for stock market movements, in general, everything looks quite random. And that's right. It is to a huge amount. It is indeed random. But there are some specific deviations. One is the topic of next week. That is power candles. And for example, another one are those trends. Because those strong trends, as already been seen in the DAX movement in my previous chart, yeah, they in principle can occur by random behavior as well. As if you throw a coin, it might happen that 100 times in a row you have the number on top. In principle, that's even possible randomly. But in general, those trends are deviations from random behavior. And therefore, those are good point in times to have trades in our account. As always, the problem with trends is to realize them. Looking to a historic chart, it's always easy. But to be already at the very beginning of a trend into the right direction and with a trend, that is something I want to address with the strategy 1, so the multiple EMA strategy. And it's a little bit related to when we have trends, then we have this typical movements with higher highs and higher lows, for example, for upwards trends. And you will see there's a good idea to find those correction phases. And those could be the trigger entering a trade. Another approach is that that's now purely related to Forex, that we know the Forex universum is huge. So we can trade not only 10 Forex pairs, maybe even 100. I'm not sure about the exact number at JFD, but you know that there are hundreds of Forex pairs. Although because those are that many, it's already difficult to identify those which have the best trend behavior, and you don't want to click through all those charts. But there's nice idea to find those just by looking to a few charts, and then we can identify immediately the one out of much more than we observe directly, the one with the strongest trend behavior at all. And that is exactly this lead leg strategy, and that is my second strategy. What is common with all activities about trend trading, that is that you need risk-reward ratios much bigger than 1, typically even bigger than 3 or in the range or close to 3. So the relation between the potential profit and your stop loss setting is like 3-1 or even higher. Why? It's not easy to have a good win rate with trend trading. And that reflects already the number here. Only 30% of the time we are in a real trending behavior. That means we have to enter a couple of trades, and we have, unfortunately, to suffer sometimes being in the stop loss. Okay. That means, on the other hand, that if we are on the right side, then we need profits much higher than 1R, one risk unit of our trade, because we have to compensate our other losses. So trend trading means trading with risk reward ratios much bigger than 1, because, and this is not because of a bad strategy, your win rate is always much below 50%. And believe me, you will not find a trend trading strategy with win rates above 50%. There's no chance, at least not if you have the right risk reward ratio. So therefore, that is something really important. Whenever you do trend trading activities, you need those risk reward ratios. But now let's come directly into the first kind of strategy. And I will do it the following. I will talk a little bit about that slide and about how we get the strategy right, and that you understand that. But finally, be sure that I will go directly to MT4 and show it in the chart as well, because then a few things might be a little bit more obvious. So you have both. And yeah, if you want, you can, of course, have those slides. Up to now, I forgot, unfortunately, to already upload them, so that you can download them directly out of the GoToWebinar control panel. But one email, and later at the end, you will see my email address as well, or you just write an email to support at jftbrokers.com. You will get the slides, no question. So whenever you have, if you want, you can have those slides. So this multiple EMA strategy tries to find or to generate better entries instead of just jumping on the trend. Sometimes you have those observations, hey, you see the trend and it's already running. And then you think, should I just jump into it? So market, for example, euro, US dollar goes down. Yeah, so open short position as we speak. So that is jumping on the trend. That is not totally bad, I would say, but there's something you can do better. And you know that price movements finally are not a straight line. You have always correction phases, always those points in times that something goes opposite to the overall trend. And now the question is, this correction should come to an end, and the market should go in the overruling direction once again. And that is the one we try to find, and that is the one we try to enter our trade. That is a little bit similar to so-called market technique, or I don't know the exact English translation, because yeah, it's maybe a typical German one. But that is a pure movement, like higher highs and higher lows for upward trends, and you know that for sure. And what we do is, to get those better entries, is we use 4 EMAs. And I wrote down here a list of EMA periods, and 20, 40, 80, and 160. You see, I simply double the EMA. And it not really depends. It was within the German webinar yesterday. Hey, can I use 20, 50, 100, 200 as well? And the answer is, of course, yes. That will not change the complete picture, and we will get similar entries as well. But what we do with those EMAs? What we do is we look for constriction phases. When those 4 EMAs values constrict, that means they come together. You will see it visually in a second. That is always a good sign that the correction of the overall trend comes to an end. And then is a good point in time to open our next trade. The trade direction, in principle, I would prefer the slope of the slowest EMA. So if the slowest EMA is still upwards, then open the trade into the long direction. But there are examples. If you see mathematically, slope is well defined, but sometimes I would say let's look to the overall situation as well. Finally, we need, as always, we need a stop loss for a trade. And those stop losses can be set out of the chart, or you might look for ATR values, average true ranges, to get a good stop loss value. And once again, what you need is risk reward ratio bigger than or equal 3 in order to get it right. But let's do it directly in a chart, and don't be confused if you see first thing now that construct of my profiling here of a big 20 different Forex pairs in this case. Don't worry, that's not, you will see why I do it in that way, but I will immediately enlarge one of those charts because then things might become much more obvious. So maybe you put away a little bit your GoToWebinar control panel, then you can see the complete chart as I did now with my GoToWebinar control panel as well. And here, I think you will understand more or less with one eye what I do mean with constriction and why those 4 EMAs are a quite good indicator to say, hey, now it's a time to open the trade into the direction of the overall trend. Look, for example, let me zoom a little bit in here, then it might become even a little bit more obvious. But anyhow, you'll see what I mean with constriction of 4 EMAs is exactly those kind of situations. You see my cursor in a circle here. Those phases are the one we look for. You see, I could even name this 1, 2, 3 movement behavior like you find it in textbooks about trading. What I mean here is that we have those correction phases. And overall, yeah, we have a long direction, market goes upwards, but those point in times are the good one to open a trade. Let me illustrate it a little bit here within that trade, and there are already some lines in it, and those lines are from yesterday. I said, okay, maybe even here within that period in time, the worst entry point is still a good entry point. That is this one here. Those 2 candles are in that region. Maybe you have opened a long trade on Euro, Australian dollar here. Where to find a good stop loss? Just look for the last lows. So we would have maybe this horizontal line being the stop loss, which is already in the past. And then minimum, I said the risk reward ratio about 3 and higher. So this upper line here would be the take profit of that trade with a risk reward ratio of 3. And you see, hey, no problem to reach it. And then once again comes the next constriction phase. So opening the next long trade, maybe we would get it right. At least until now, it would have worked. So that's an extremely good example for that kind of setup. And you can realize if you do it for a couple of charts that you find similar behavior in lots of charts. I hope you understand the concept of constriction. I don't use a mathematical definition like, hey, those 4 lines have to come together in the order of below 0.5% or so any real threshold or limit. No, I want to have that as a guideline for trend trading activities out of the chart, but more like a tool, like something which assists me to find the good entries. And now back to why I have that maybe amazing chart here with thousands of lines and so on. The answer is quite easy. That chart gives me, in a few seconds or maybe 1 minute, I can go around and find the good opportunities. Because if, for example, let me highlight right now this Canadian dollar Swiss franc here, I see, okay, those 4 EMAs are already far away from each other, so not a good candidate, skip it. So what I look is, or what I try to find are those ones where we just see by eye those constrictions. And now I can go through the charts quite fast and say, okay, Australian dollar, Canadian dollar, candidate. You might have a better look here. Here it goes already out, out, out. Let me, yes, this one is already far away from each other. So next good candidate here, Swiss franc, Japanese yen. And you see, and I can find very fast. I can do that analysis very fast, and I only need just a few seconds to say, okay, now I go in this one a little bit more in detail. For example, the first one here, which looks really a little bit funny. So if I come to that now with a complete chart, I would immediately say no. That is not a good candidate because we just very often come from short upwards to short downwards, short upwards, and so on, trend behaviors. So that is not a very good candidate to say, yeah, now we can open a trade for that one. Let me look whether I can find directly a better one. So let me look for this one here. So there have been a couple of good opportunities here in the past. So now I would say let's wait a little bit more. Needs a little bit more time to say yes, short south is the preferred direction. And now you see why I say I don't go with a slope definition by 100%. In this case, I would still say no, this is a short scenario, and this one would be a short candidate. So you see, it does not mean that we find always 20 possible trades, but honestly, that would not even be good. If you find by that kind of analysis one opportunity a day, good, that's fair enough. And even you can change time frames if you want, but I don't recommend to go down the road to M5 or M1. Leave that for the computers and any other trading strategies. Let's be a little bit more fair. Let's be on H1 upwards, so H1, H4, and then you will always find some opportunities. And if we find one a day, that's fair enough. So that's how we can apply that multiple EMA strategy simply by looking to 4 EMAs and looking for those constrictions of those 4 EMAs. And then we realize, hey, that's a good chance. And finally, I would show another example, and that is a euro US dollar. Right now, we have once again all 4 EMAs are far from each other, so I would not open a trade right now. But because we have had a reversal, we have been on the south strip. Now we are back on the north strip. Let's wait until the next constriction, and then we can open the next long trade right now. And if the trend goes further, perfect, then we will earn 3. If maybe we go once again back to the south, then we will lose 1. But that's fair enough. And therefore I mentioned we will never have a win rate in the region of 50%. But if we have finally a win rate of, for example, 30% with a risk reward ratio of 3-to-1, then everything would fine and strategy works. So that is the one scenario. That is the so-called multiple EMA setup, and I hope you got it right, and how those 4 EMAs can help you to identify already the early stage of a trend, or better to say that we are in a trend and that we have the end of the correction phase and that we can now open our trade into our preferred direction and have a good opportunity to get that trade right. So that's the one strategy, multiple EMA. But we have another one, and that is about Forex trading. Even I mentioned on MT4 only Forex pairs, but nevertheless, you could apply it perfectly to any index as well. But now we are purely driven by Forex. And the strategy's name is a lead leg. So intuitively, you might have an idea of what that means about lead and leg of a pair. But let's get it started a little bit other. Because I have once again to mention that the Forex market at all is a highly correlated system. That sounds now maybe a little bit crazy. And you have heard about correlation already, or you have seen correlation matrices or whatever. Let's really boil it down what that correlation means here in that sense. And the example is quite easy. And sometimes for the one or the other, it might be even a surprise. Because you deal with Forex trades already maybe for years or even decades. But to see how those things are correlated is something we have to really show here up. And just for an example, let's assume that Euro US dollar increases, so goes upwards. Right now it goes down, but anyhow, no, last movement was down, but the overall, don't go into the details of chart technique right now. So we assume Euro US dollar goes upwards. That means if we look to all other pairs like Euro XXX or US dollar YYY, so that stands for example, Euro Canadian dollar, Euro British pound, whatever, or US dollar Canadian dollar, US dollar Australian dollar, so whatever comes with the US dollar. What's impossible that, for example, Euro US dollar increases, and you don't find any other movement in all the other pairs. That's, strictly speaking, impossible. It can't be. And the reason behind is that if we trade Forex, it means we trade always a quotient of two different currencies. I know that I'm only translating what's a Forex pair, but let's think about it. So what we really trade is we know there's a currency called euro, and we know that there's a currency called US dollar. And what we trade is the exchange rate of those. And now, of course, it might be, for example, the euro becomes strong or the US dollar becomes strong. Then if that's the case, then other Forex pairs must follow. So, for example, if I'm right with the statement euro becomes strong, then if we consider euro Canadian dollar, it should have the same direction. Only the answer that it's in principle it's possible if the Canadian dollar is at that point in time even stronger as the other, then it might change the direction, of course. But in general, we talk about currencies and not exchange rates. That helps us because what we really like to know is, hey, what's the currently strongest one and what's the currently weakest one? And if I can identify the strongest currency and the weakest, then we should trade exactly that pair. So then we have the overall best trend behavior. And I can summarize that, and I will show you much more details about the strategy itself later on the next slide. But let me first show you once again what does it mean if we have those correlated markets. Think about, you look for a chart of Euro US dollar, and you look for another chart, Euro Japanese yen. If you look to those two charts, then in principle you know everything about US dollar Japanese yen as well. Why? Yeah, quite easy. If you have the two values or even the time series of those two values, which we name chart, if you have Euro US dollar and Euro Japanese yen, then you have just simply to divide those two numbers, and then you get US dollar Japanese yen. And to visualize that a little bit more mathematically, simply write Euro US dollar as a quotient like Euro divided by US dollar. And now if we do really that kind of division, like Euro divided by Japanese yen divided by Euro US dollar, then you could do exactly what you have learned in third class in your math school, and you cancel out the euro, and finally you have US dollar against Japanese yen. For the one or the other, it might be a surprise, but it is as it is. And that's the reason why all our Forex pairs are that correlated, because they are based on currencies, and what we trade are exchange rates. And knowing that, we can use that for our trend trading activities. How does it work? It works the following. What we do is we look simultaneously, for example, to 6 different Forex pairs. And those are just the row Euro, Australian dollar, Euro, Canadian dollar, and so on and so on. So what I have here is in total 7 different currencies. And out of those 7 different currencies, you can build up 21 Forex pairs. And the good thing is that what we have to do now is we have simply to focus on those 6 charts in order to identify the best trending Forex pair at all. And how do we do that? Quite simple. What we look for the best upwards trend, so the one which goes north, and we look to the best downward trend, so that Forex pair out of those 6, which goes best down. If we found those two, then we trade exactly what I call the quotient of the two. So assume the best one is Euro Australian dollar going upwards, going to the north, and the best going south is Euro Canadian dollar. Then my trading candidate is Australian dollar, Canadian dollar. That's the one with the overall best trend at all. And then, having identified the best trending Forex pair, I can look for a good trade in exactly that pair. So we use those 6 charts, those 6 Forex pairs, to identify the best trending one out of 21. Or you might say, okay, I want to have Euro, New Zealand dollar in the row as well. Then you cover in total 28 Forex pairs. So that's something you can add here quite easily. Just before I go once again to the charts, let me mention what happens if all the 6 go north. Okay, if all the 6 go north, then the best candidate is the strongest, which goes north. And same vice versa if all the 6 went south. What helps you might be to identify the strongest and the weakest is just put an EMA into the chart as well. Or you will later see in my chart, I use some small boxes, some rectangles with a fixed percent size, and those help me as well in order to identify the strongest and the weakest. But let's go in practice here. So what I use is a different profile, and if you are not that familiar with those profiles, you can make them, store them, and then reopen them. That's quite a good thing within MT4, because then you don't have to create always new charts. So now here we are. I have in one mouse click all the charts fresh and in the way I want to have them, and to have them always the same. So what do you have within that profile? We have the euro, Australian dollar, Swiss franc, Japanese yen, Canadian dollar, British pound, and US dollar. And now the question is quite simple, and sometimes but not that simple to answer. Who is the strongest and who is the weakest? So let's go through the list of candidates. We immediately see, hey, we get a problem. Who might go north? So we have not a really good candidate going north. We can decide who is strongest going south. And even we have really today a strange situation. And if I see that funny candle here within British pound, euro British pound, it's really getting crazy here. But let's take it as it is. So let's identify the strongest and the weakest. So weak seems to be euro Canadian dollar, and weak seems to be euro US dollar, and maybe euro Swiss franc, which shows quite a good behavior. But now here comes the but. The but here is a little bit the scale. All scales are always automatically done within MT4. And what I do here is, in order to get them scaled better, I draw such a box, such a rectangular here, simply by this one. And now let me do it once again. First, I started this way. I just do it freehand here, and then I click it and get the properties, and now I have the four corners of that box. And what I do, finally, I just want to show you, I take out a few digits here and then multiply this with a fixed number. And in my case, I use the number 0.999, which means, finally, that this box has a size of 0.1%. And I do that with all my boxes in every chart. And that now has a meaning. That means all my blue boxes here within those 6 charts have a height of 0.1%. And I can use that information just visually in order to get all the 6 charts scaled the same. You see the smallest in height, the smallest black box is within euro Japanese yen. And now I scale all the other charts simply that visually this box size is the same, because now those 2 charts are scaled the same, because every box is 0.1% in height. And I can do that with all the charts, and that might help me to answer the question, hey, is really the euro Swiss franc the one with the highest negative slope? And now, in this case, the answer is yes. Although those two are close to each other. So euro Swiss franc and euro Canadian dollar are the two ones which are good candidates going south. And now, in order to really identify at least one which goes upwards, and that is then Euro, Japanese yen. It's going a little bit upwards already, but not that strong. You find other times in the market, and sorry that we don't have that good example during I speak here. So that's a little bit a pity, but it is as always as it is. So let's take this as an example, and you believe me, so you find later even better examples, maybe tomorrow, or you change time frame, whatever. So having identified the one going north, Euro, Japanese yen, having identified the one which goes stronger south, Euro, Canadian dollar. So our trading candidate is then Canadian dollar against Japanese yen. And that would be the one we now open a new chart, and that is the one we try to identify good trading opportunities. Since we have had problems already with that kind of identification, it does not look that ideal within the chart as well. So therefore, let me do here something similar. It takes me not long. Let me change for all the time frame, and that you get the picture a little bit more like textbook, because my conclusion of what we have seen a minute ago has been don't open a trade. But now I change time frame, so most of them go upwards, and the strongest upwards movement is shown by Euro, Australian dollar, and we find one which really goes south more than all the others, that is Euro, Swiss franc. So our trading candidate would be Australian dollar against Swiss franc. And now we look into that chart, same time scale, and now we have a very ideal candidate for a short trade. How to finalize that trade? Simply by technical analysis. So we know short is given, don't open a long trade within that chart. And now it's simply technical analysis to find a good trading opportunity, and looking, for example, to that chart. It might be that you say, okay, I want to have one additional correction here, maybe not that huge, maybe until here, having a stop loss above the former highs, and then a short trade with a sell limit order at that point. So that's how you can go through the markets. And the idea behind is find the strongest, find the weakest, and trade those two against each other, which just means that if you have as the strongest Euro, Canadian dollar, and if you have as the weakest Euro, Swiss franc, then you trade Australian dollar against Swiss franc. You look for the direction, and you will find immediately what's the preferred direction, because then you have the trend with the strongest behavior at all, and that is identified, and now it's ready for some trading opportunity for that specific pair. So we use this lead leg approach to identify that final Forex pair with the strongest trend. And that is our trading candidate, and that's the one to open or to be analyzed, and then to open a trade if you want. That's how it works, and that's exactly the lead leg strategy. You immediately realize that this cannot be applied to any indices, because we cannot trade them against each other. We don't have really a trade like S&P 500 against DAX. We might be able to create something like that, but that's not meant here. And this is really Forex trading pure Forex trades, and that's what we want to identify. Called lead lag, and it's quite helpful to identify those trend trades for the Forex markets. So what's the summary? What's the lessons learned of today's webinar? Yeah, overall, the trend is your friend because we know that trends are a deviation from random behavior. And that's good because whenever we leave that random behavior, we can realize our trading opportunities. Then we know that something goes on, and that is exactly the trend we would like to find out and to be triggered by those kind of signals. So we have two approaches here, and one is the multiple EMA strategy, which generates early entries into the overall trend. Still, nobody knows exactly the future. But if we apply those kind of rules, it means that we go with the market, with the overall behavior. And that's always better than to stay against the market. And that is something we do not do here because we want to go with the waves, to go with the money flow, to go with the overall behavior. And a second strategy during that webinar is the lead lag strategy, because that helps to identify the strongest trend at all. And that's simply by looking for the strongest currency and the weakest, and to trade finally exactly the Forex pair, which is built out of those two currencies. I hope you enjoyed today's webinar as well. We continue next week here. I will continue next week, but all my other colleagues, they have good webinars on the JFD channel. You might register for those as well. I can only recommend it. What differs us from others is simply we really trade what we talk about. And so if you have any questions, just send me an email. You see my email address here, or you get in touch with support of the customer support of JFD. You can have those slides if you want. I'm more than willing to share those with you. And if there's something, just send me an email. And I have to say, have a good evening and see you next time. Bye bye.